podium. Accessing capital, the panel facilitator will be Bob Rauch, Business Advisor in the University of Delaware Small Business Technology Development Center. He will provide an overview of the discussion and introduce the panel members. Should be a very, very interesting session.
Sonia's. Usually I don't need a microphone because I got such a loud voice. But I hope you've all had a great day today. There's been a lot of tremendous information and interesting speakers. And they said they'd keep this one last because it would really keep everyone in the building. Well, at least some of yous are in the building. Anyway, I am Bob Rauch, a business advisor with the SPTDC. And with me this afternoon I've got 6 distinguished panelists who will try to answer some questions that will be raised to them, and hopefully we'll have some time at the end where they can answer questions from the floor. With me today is Van Hampton. I had this in a different order than what they sat up here on, but that's okay. Van is the Executive Director of the First State Community Loan Fund. He's been with the Community Loan Fund since 2004, and First State is a not-for-profit community development fund that specializes in supporting small businesses, micro-enterprises, and affordable housing in the state of Delaware. Also with me is Dallas Curley. Dallas is down there. Dallas is with Benetrends, which is a firm that specializes in funding for small businesses and setting up a business structure that allows those businesses to use their 401k as the funding the capital without incurring any taxes and penalty. It's a pretty elaborate structure, but it does work for a lot, and we're going to talk about that a little bit. Another panelist, and I guess my name doesn't want to stay here, huh? Whatever. Is Gene Abbott. Gene is Vice Business Development with Regency Business Funding. Regency Business is a commercial financial firm who really offers factoring of accounts receivable, purchase order financing, and some other types of financing that is what we would consider, alternative types of financing that many small businesses find themselves in the need of. Also with us today is Bill Lang, who's the Vice President of Small Business Relationship Manager with WizFiz Bank. WizFiz, as you know, is a locally managed community banking institution. Bill has been with the banking industry for over 20 years. He has experience in credit underwriting, commercial real estate lending, SBA lending, and a lot of experience in his current job being the Small Business Relations Manager. Also with us, and I'm sure he's got a busy schedule given everything that's going on in the last month or so, is Joe Dorm, the Business Banking Market Manager at M&T Bank. And as you know, M&T just completed the acquisition of the Wilmington Trust Bank here in Delaware. Joe has over 26 years of banking experience and 15 years with M&T in the retail and business banking product development areas. And last but not least is Stephen Bach, who's a business financial specialist with the Delaware Economic Development Office. Stephen's been with DDO for 5 years in his current role as an analyst in structures, commercial lending, and private equity investments made under the state's Economic Development Fund and various programs. Please welcome our distinguished panelists here this afternoon. And we're going to try to make this as quick and as efficient as we can because we know that the sun is out there and people are headed out. It's a Friday afternoon, and no worse than being the last speaker before lunch, being the last panel before Friday afternoon. So we're going to make it as quick as we can. All right? I will ask the questions to the panelists, and then hopefully we'll have some time at the end. The first question I have for the panel generally is that the last 3 or 4 years have been very challenging to the small business community in many aspects, okay? I've seen it through my clients, people who come to us. Those who have survived in many cases have reinvented their business and cut costs and now are looking to rebuild their businesses. Surviving through these challenges, however, many find themselves to be undercapitalized. Do you have any recommendations how these businesses can rebuild their capital base? Anyone? Gene?
I'll take that. In a word, factoring, or accounts receivable financing. It's heavily used in many industries. I was in the printing business for over 35 years, printing for Sears, Kmart. We factored or sold our accounts receivables. It kept us in business. It's very easily accessible. You're used to the usual way that you obtain capital from a lending institution, be it a bank or whatever, and they're great. You want a bank line of credit? Absolutely. We'll be the first to tell you that. If you have one, increase it if you're in a position to do that. Factoring, we approach a whole different way. What we look at is the creditworthiness of the people that you are invoicing, your business clients. We don't look at your credit, and we are not about bad credit. We are the same as my friends at the bank, and when we front $100,000 or $1 million, you can bet we want it back. But here's how we look at it and why we don't look at your credit and why it's more easily accessible. We look at your client list that you're invoicing, and we'll run a credit check on them. And if they pay in 60, 90 days, we'll probably buy every receivable you send after that. What we want to see is that your clients pay, that nobody's had to take them to court, okay? And if so, we will tell you that from this day forward, every time you send your client an invoice, within 1 day in domestic trade, you will have 80, probably 90% of the value of that invoice. And I hope you understand what I'm saying. If you send them a $100,000 invoice yesterday, you sent it yesterday, today you will have good, usable, collected funds, 90%. You have $90,000 in your account today. What does that do for you? There's a fee, and you're going to ask me that later.
Well, I'm going to ask you that, but I'm going to ask some of the other panelists as well, Gene. Thank you very much. Bill?
There we go. I think we're good now. There we go. I think that one of the things we have up here with the panel is I think you have a lot of different options out there. Although that the economy has gone through a difficult time over the last few years, I'll tell you that I think that I consider myself a relationship manager as well as a trusted advisor with most companies that I deal with. So I think that if you keep them in the loop and you show them things that you've done and things that you're working to do with some positive trends, I think a lot of banks are now willing and able to work with these customers. And you do have some other organizations out there to also help as well. But I think if you keep your like for myself, a specific banker, in the process and try to work with you, because again, it's about a relationship and not just a transaction.
Very good. Anybody else? Van?
I just want to add, I agree with everything that Bill said, but really just put a solid plan together. It's been, we've had some challenges over these last few years, as we all know, and a lot of businesses, got into a lot of trouble. Some of it through no fault of their own, just the economy and things that are going on. And, we've seen a lot of requests over the last few years. It's really hard to fund a business if it's really kind of at the end. I mean, if you've not, taken a look at your business and reinvented yourself, if you've not really put a plan together, if you don't have anything that we, as lenders, we want to, figure out how we're going to get paid back. And I think everybody, can probably agree, we can't save a business that's not going to be saved, but if you take your time, you put a solid plan together, you work with the Small Business Development Center, and, you can see your way out of it, and you can convince your lender that you'll see your way out of it. I think there are opportunities for folks to get access to capital.
Good, Joe.
Yeah, Van, I think you're dead on. Having a plan is key, right? And, you used the word survive, and the way they survived was because there was a lot of introspection. They really looked inside their company and said, how can we cut expenses? Can I take less as the owner? And I think keep doing that with a plan, building retained earnings, so that when you need the finance, you're walking into a financial institution with a stronger balance sheet and a stronger P&L.
Okay. Yeah, one of the things I think is very important as I try to counsel my clients on is communication with your banker. A lot of small business think, I don't want to, don't want to let them know this or he or she or this. Really communicate with them. Let them know what's going on instead of walking in the day before you need to get the money to make the payroll. So, keep in the communication link. It's very important. Second question, there are a vast amount of economic indicators. In fact, this morning we heard Mr. Broussard talk about those. I've got my own view on economists, right? You could get a room of 100 of them, get 50 of them to agree on one side and 50 of the others, and they're always going to be right. All right? There are a vast amount of indicators out there. Many of these suggest that the economy is improving, yet many in the small business community are saying, I don't see it. What are some of you seeing out there in the small business areas in terms of what they're seeing being pulled from the economy, or how the economy is changing, or whatever space that they're in? Van or Gene, go ahead.
I'll go with that. There's an industry, the News Journal did an article on the business page recently about the transportation industry, specifically owner-operators or independents. These folks have been getting beaten up. Some of them are going out of business. We have programs. We have over 3,300 trucking clients. Here's what we do. Oh, charge. You're going to ask me what we charge. Somebody said factoring is expensive. I'm going to tell you this. One of the highest rates we charge is to the trucking industry, 7.8%. That's a lot of money, but listen to what we do for them. If you're right now, you're delivering those loads, you're invoicing your clients, and guess what? Those shippers are paying you typically in 30, 45, 60 days. In the meantime, you can't fuel your trucks. Exxon has cut off your credit. This is real life, gang. They've cut off your credit card. Your tractor trailer is broken down on the Connecticut Turnpike. I know. I had tractors and trailers in the plants I ran. Here's what we do. You go to our load board. There's over 100,000 truck pickups for you a day. And the other day in Wilmington, I entered Wilmington that I wanted to pick up a trucking load within 25 miles. There was over 2,800 for you, the trucker, to choose from. You pick the one you like because you have a reefer truck, a flatbed, okay? You deliver it, and here's what we ask of you. We give you a self-address ready for you to ship the bill of lading to us, overnight delivery. We get the next day the bill of lading that you delivered it yesterday. We will pay you your entire fee minus our whopping 7.8%. So if we owe you $500 for making that delivery, we're going to take, I think that's $39. You get $461. You're paid. We load it onto the credit card. We get the debit card we gave you. You're out of there. If the shipper never pays us, you're out of it. You're paid. You're over with. And also, at over 10,000 truck stops with the card we're going to give you, you get 3 to 8 cents per gallon discount. We'll do those motor fuel use tax reports that you have to do for Maryland, Connecticut. We'll do those for you from your logs. So I ask you, is 7-8% a lot of money? I don't think so. You just drive your truck, gas your fuel them up, and go on to the next load.
Let me just stop you, Gene. In terms of what are you seeing from the various clients that you have, Bill or Joe, I mean, are they seeing this recovery? Are they really feeling it?
Well, I think one of the things that Van and Joe brought up are great points, and that is you are seeing businesses over the last few years, maybe their gross revenues and sales have dropped, but they have plans in place that have reduced their expenses so that they're still a viable company at $500,000, even though maybe they might have been at $2 million. So we've seen the trends start to be more positive. Does that mean that their sales were as strong as they were a few years ago? No, not necessarily, but they're still very good businesses, and as long as we see the trends going in a positive direction, we think that they are a bankable client, and we've seen some very good requests. I'm sure you guys have seen the same thing, that we don't need to necessarily see 5 years of great profits in order to work with these companies. We need to see the positive trends and that they're still a viable company.
Okay, Ben? Oh, I'm sorry, Dallas, go ahead.
I was going to say, even if the revenues are staying consistent over the past few years, one thing we're seeing is profit compression. They haven't been able to pass that price increase, the commodity increase, along to the consumer. So while they're working hard to keep the revenues and the sales numbers up, the profits are shrinking. They're finding it more difficult, additionally, to find capital to expand their business and to take care of adding another site or another facility to their business.
Okay, Ben?
Yeah, I guess it was explained earlier, but we're a non-traditional lender, so we typically focus on businesses who are not quite bankable So, kind of how businesses have fared over the last few years. Those are the types of deals we've been looking at since 1993. What's changed for us is now we're seeing more mainstream businesses who cannot get access to capital through traditional markets, and they're ending up on our doorsteps. And there are some challenges. Some of the challenges that we have, they're leveraged. They're highly leveraged. They have a first lender in there, not really willing to do anything else. But this business has an opportunity to grow or an opportunity to expand because they may have access to a contract or something like that. So those are the types of businesses that we're interested in funding. We're willing to take a chance with those businesses. I think it all kind of goes back to what was echoed earlier about putting a solid plan together and just really understanding how we're going to get paid back. But we're starting to see requests. I think things are, we're starting to see signs of hope. And we're encouraged and interested in businesses and opportunity to help businesses grow.
So let me quickly continue the good news. And I couldn't have said this up until about 2 months ago because as financials now have started to come in from 2010,
Right.
I think we've seen 2010 numbers in aggregate looking better than 09. So what that continues to tell us is, on average, 09 might have been the bottoming out. Numbers started to improve in 10 and are getting better. You're dead on, though profits are still, even if sales maintain, they're still skinny. But if you just look at what we've seen come in from from long-term customers and looking at their numbers, looks like 9 was the bottom, 10 was improving.
Yep. Okay. Another question is mostly to the banks. There's a perception, and perception becomes reality with some, that that the lending institutions have raised their qualifications in today's credit market. First, is that true? In other words, are banks, normal commercial institutions looking, have higher levels for credit scores, whatever? And if it isn't true, what are the institutions trying to do to dispel that from some of the small businesses who are saying, I've heard this, and I don't think I could, I'll be wasting my time to try to get a loan if that's the case. Bill?
Yeah, I'll jump in here first. No, I don't think that it's true. I think that our bank does a very good job on trying to help as many small businesses out in the community. One of the things I will say, though, is over the past 5 years, you hear in the residential market no-doc loans, and, they're a thing of the past for the most part. Well, in the commercial world, it's the same thing. I mean, you're not going to get $50,000 and $100,000 applications and mail in a signature anymore. We need complete packages. So I would say really more truth to that statement is the banks are crossing their T's and dotting their I's more. But for our specific bank, we have a very strong approval percentage with applications that come in. And again, on everything we've reiterated, if there's a good plan in place and there's a good history, across the board, whatever industry we're looking at, we're still being very aggressive in the marketplace. But I don't necessarily think that it's harder to get a loan through the bank. I think now it's that they're maybe getting some additional information that they may have not requested before.
Yeah,
Joe?
I guess if you don't go crazy with your lending philosophies when things are busting, like in 06 and 07, you don't have to pull back much when things aren't going well in 09 and in 10. So our underwriting practices have remained fairly consistent, which meant in 06, 07 we might have lost some deals. Might argue maybe those deals are going bad today. So our lending practices have stayed the same, so we haven't really pulled back. I mean, our approval rates in the last couple of years have only dropped to maybe single digits year over year, so not dramatic in declines. And I'll tell you one reason why. Not only are we the #1 from an M&T Bank perspective, #1 in Maryland, Wilmington Trust #1 in Delaware from an SBA perspective. I see Mike Rossi out there. We're a big friend of the SBA. And we're heavy users of it, and any time that we can turn a no into a yes using the SBA, we will.
Okay. Go ahead, Dallas. I'm sorry.
Our firm works closely with the franchise industry. Probably 70% of our clients are franchisees or franchisors. One thing we hear echoed over and over again, particularly in the SBA front, is prior to the financial collapse in 2008, the SBA would take franchisors' training as experience to get the loan. Now they're saying that a prospect needs 2 years of private or prior experience before they'll get the SBA loan. So that's one significant change that we see anecdotally in our area, having to have 2 years of experience in the industry as opposed to prior accepting the franchisor's training. So if you're going to open up a Great Clips or a Sport Clips hair cuttery, you need to work in the haircut industry as opposed to just coming out of your executive training and say, I know how to run a business, never cut any hair in my life, but now you need that experience before you can get that loan.
Okay. Anyone else? Van? Or nope? Okay. Bill, I've got this question specifically for you. Joe had mentioned how the SBA plays a role with M&T. How does the SBA work? I get a lot of questions of people come to me and say, I'm going to get a loan from the SBA. And then I have to explain to them, and I'm sure you can do a better job than I do. So how do you use the SBA, and how does the SBA process work?
Sure. Well, just stepping back, our bank continues to try and assist many small businesses throughout the area, not just with the SBA, but also with the USDA and Delaware Access Guarantee. So we have a toolbox of different tools that we try to use to help out small businesses. Specifically with the SBA, they continue to be a great partner in and throughout Delaware and really across the United States. That we use them if a deal maybe is a little shortfall in something specifically, maybe like collateral or a startup business. As Joe had said, Mike Rossi and Jane Armstrong and all their staff continue to be a great resource. But how it works, well, you still work directly with the bank. And the SBA is an organization that goes and backs a percentage of that loan, a large percentage of that loan. That if a loan is specifically missing a piece, and it's a little bit outside the box, that the banks, for example, we're a preferred lender. We would go and try to use them as an additional resource to get a loan approved that they may not have had approved otherwise.
Very good, thank you. Joe, I've got a specific question for you. When an existing small business decides that they need capital to seek for additional working capital or new capital, what are some of the minimum requirements they need to be cognizant of that the bank, your bank, would be looking for to present to them?
Right. So let's start with the financial reporting requirements. So we're going to need an application. We're going to need 3 years of business financial statements. We're going to need 2 years of personal tax returns, a personal financial statement, and then depending on the type of request, there may be some additional information that's needed. For instance, if we're doing a working capital line of credit, we're probably going to need to see an accounts receivable aging. Then we begin to look at and to get into some additional specifics. Dallas mentioned years in business. We're looking for 2 to 3 years in business. We're looking for cash flow coverage, enough, at least 1-to-1, if not 1-2-to-1, to cover the debt that we're looking at applying. No derogatory as it relates to the individual owner or owners of the business, and then looking at appropriate collateral coverage.
Okay. Some of my clients come to me and they think it's just a matter of going there. They've got to be prepared and understand what the banks are looking for. Thanks again, Joe. And if it was a startup business, how would that differ?
Yeah, I'd say that the other two things that we would need to see is a plan. So what's your business plan? Probably out 3 years. That would also incorporate how you plan to repay the debt. And then we'd also want to see probably an equity infusion from the owner. So we're probably not going to do 100% financing of your startup. We'd want to see you infuse about 20% into the operation, and then we would either look to do that solely as the financial institution or look to a partner like the SBA to support that request.
Van, in terms that you are non-traditional, as you indicated, what are some of the requirements that you look at that are slightly different or less onerous? If onerous is the right term, it's probably not.
Yeah, I don't think it's less onerous. You probably talk to some of our clients; they probably think it's more onerous. But we actually look at a lot of the same things the banks look at. We want to have collateral. We look at the credit. We want to know what equity is in the business. I think a couple things that make us different. One thing that makes us different is, so our criteria is not going to be as stringent. Joe talked a little bit about no derogatories as far as credit is concerned. So we had a client had some issues a few years ago with their credit. They've turned it around. They've got payment arrangements. They've got a story behind it. They've been proactive in dealing with it. And that's a client that we may be able to work with. With regard to collateral, we'll consider secondary collateral, or even third. We'll take a second on a house, a third on a house. We'll take co-signers who will step up, who have a strong personal financial statement. So there's a lot of things that you could bring to the table that'll help strengthen the deal that may help us make the loan. As far as equity is concerned, we typically look at 10 to 20% equity. Many of our clients are closer to 10% than 20%. I know the banks, for startups, 20, 25%, sometimes more. So those are some of the things that we can do because we're not a bank, we're not regulated, we're a nonprofit, we're mission-driven. Those are some of the things that we can do to help our clients. The other big thing that makes us different, and I think this is probably the most important thing, is the fact that we offer technical assistance. So we get a client who comes to us, they're looking to start a business or expand a business, and they apply. We think it's a good idea. They've done some things right, but they're not quite ready yet. We'll work with that client. We have staff that's dedicated to providing technical assistance to that client on the front end, helping them with the plan. Maybe we need to bring an accountant in. Maybe we need to bring a retail specialist in. And those are the types of things that we can bring to the table as a nonprofit that banks are not able to bring to the table. We work very closely with the bank. So most of the folks sitting up here, at least the bankers that are up here today, are all our partners. That's where really we get our referrals from. The bank looks at a deal. They like, maybe it's a client, they like them, but they're just not ready yet to make an investment. We get a call, can you take a look at it? We can't do every deal that comes across our desk. Sometimes, we can't do it either, but I think one of the things we are committed to do is to work with the clients, after they've made a request, and maybe in 6 months or a year, we may be in a position where we can make a loan. The other thing that I want to point out, the partners that are the banks that have been talked about are our partners as well. We're an SBA micro lender, so we get funds from the SBA to do lending. We also work with the Department of Agriculture, USDA, through their intermediary lending program where they loan us money that we lend in rural Delaware. And we also work very closely with the state through the Delaware Access Program. So a lot of the same tools or same organizations that the banks work with, we work with as well. We're currently have an application to the SBA under the Community Advantage Program, which is a program which will allow nonprofit lenders like us to actually get access to SBA guarantees. So we're hopeful that that's going to come through. And if that comes through, we'll really be able to help more borrowers because that'll help us deal with some of the collateral issues.
Very good, thank you. I'm going to bounce around a little bit for my question. Stephen, who represents DIDO and also is the sponsor, and I think we can thank Ken Anderson for a great conference today. Thank you. Stephen, you've heard some of the other panelists in terms of access to capital. How does DIDO play in the capital access area?
Sure. Thanks for the question, Bob. Since Secretary Levin took over as our director in 2009, my unit, which is the Capital Resources, which provides all the financing for businesses in Delaware through DIDO, we've done about 35 direct loans, which represents about $45 million that we put out on the streets to both small and large businesses. And if I had to guess how many companies we've assisted to get financing either through the Access Program or referral to, say, WSFS or Wilmington Trust, I would say probably double that, probably close to 70 over the past 2 years. Unfortunately, a lot of folks in the business community have a misconception that DIDO only deals with large corporations because that's typically what you hear in the paper. But just the other day, I went over our portfolio, and 80% of all of our loans have gone to businesses with 50 employees or less. So of that 45 million, 80% of that is in the hands of small businesses. Our current portfolio spans a number of different industries. We have loans to sheet metal manufacturers, healthcare organizations, recycled material providers, automobile manufacturers. So I definitely wouldn't say that DIDO targets any specific type of company in any specific type of industry. We operate my specific unit much like a bank does in that in order to provide the financing, each request undergoes a very rigorous underwriting process. It's the credit to cash flow analysis, collateral appraisals. We have 2 boards which need approval for the financing to actually be dispersed. And then we check with all our regulatory agencies to make sure that a company is compliant in terms of tax and labor issues. But the primary components that we're looking for in a project is 1, debt repayment, and 2, which is very different than banks, is job growth and job retention. Both would contribute to the tax base through the personal income tax generation. Unlike the banks, DITO does not really care about interest income or building a consistent revenue stream because we operate on a budget bill basis where we're appropriated funds. So what we look for is how many jobs are you going to add, how many jobs can you retain, and what are the wages that are paid to those employees. Also, we seldom fund, and I want to make this point very clear, we seldom fund 100% of a project's cost. So again, much like a bank, we may say you need to throw in 10% equity to this or 20% equity. Typically, we'll do 30 to 50% of the loan, with the remainder coming from both the equity and if we can get syndicate financing with one of our partners on the stage with me today or another financial institution. And just to give you an idea of what the variety of our loans is our smallest loan that we've made in recent years was $50,000 to a Milford company that does custom gasket manufacturing. And then the largest we've done is to help fund the up and again running Delaware City refinery, which we know was slated for permanent closure before the Markell administration and our office stepped in to help bring in PBF. So DITO funds, pretty much any kind of project that has job creation and job value to it.
Very good, thank you. Dallas, you work in a different area than the most traditional funding. I've seen the plan for using your 401k. What brings people, without getting any complexities of the structure, because you don't want to listen to this in an Friday afternoon. It's very important, though, for some. What are the type of clients that come to you that look at this structure of using their 401k plans? And do you get pushback from, I've heard other financial advisors that would really warn or tell their clients that that's not the smart thing to do. Can you tell us a little bit about yours?
Sure. Well, last year we funded or helped fund over 1,000 businesses. So it varies from small businesses that are $50,000 that they need to start up to $2 million plus businesses. One area of growth that we've seen significantly in the last couple of years is people who are accessing their retirement funds as a capital injection, the SBA loans. If you need 30% down on an SBA loan and you don't have that type of capital, many individuals are accessing their retirement funds to help fund the SBA loan. The financial advisors, we've done a great job of keeping this process secret, and that wasn't intentional. But I don't know how many of you may have heard of it before, but if you ask your average person on the street, everybody assumes that in order to access your IRA or 401k, you're going to pay taxes and penalties and interest if you take it out early. But having said that, one industry that has embraced it wholeheartedly is the franchise industry. Last year, 10% of all franchises that were sold in the country utilized the 401k or IRA rollover process, primarily because conventional funding has been so difficult to get. Certainly, if you're looking at accessing your retirement funds, I don't know that I would disagree with a financial planner that you want to make sure that what you're doing is proper and the right way to do it. Our concern internally is not so much whether legislatively, which I think was one of your other questions, was going to be an issue. Our concern is that smaller organizations who are getting into the process, who may not have as much experience and don't do it properly, are going to give the entire industry a black eye. We try to proactively meet in Washington with the Department of Labor, the IRS, and legislators, going over the plans and submitting our prototype plans to make sure that they remain compliant, and really to address any issues and concerns that the government has with these plans.
Okay. The last question I have is, Gene, you talked about factoring very passionately, no question. And we all know that factoring is traditionally more expensive on an APR rate. But what are you seeing in that area? Are you seeing a greater need, more clients because of the difficulties in the traditional credit markets, or what are you seeing in that market?
We really are. With the clients that we work with, they're having a greater and greater need for quicker access to working capital or cash. And part of the problem is that their clients are taking longer to pay them. They have clients who may be paid in 30 days. We're taking 45 days now. Those things are happening. So with the accounts receivable financing, we turn your invoices into cash within a day. really, and give you 80 or 90% of that. That allows you to do a lot of other things. You can pay your vendors faster. You should get discounts for doing that. I've done this with printing plants I've ran. If you're going to pay a vendor faster, call them up and say, Mr. and Mrs. Vendor, I'm going to be paying you a little faster, but I need some help from you in order to do that. Almost always, you will get some kind of concession from them. It also allows you to start approaching larger customers because we'll fund those transactions for you. Larger transactions allow you to make larger profits and grow your company. And I hope I can do it in 1 minute. An example right here in the city of Wilmington, a client that we're working with, he's a Wilmington resident. He's a minority. I was introduced to him by the City of Wilmington Economic Development Department. He's been in business 20 years, and he hasn't given me permission to use his name, but Joe DePinto and those fellows in Wilmington know exactly who I'm talking about. And let's say he's been doing about $1 million a year for, most recently anyway, for 20 years. He wanted to grow his business. He wanted to get into exporting. He did not have an adequate line of credit at the bank or vendor credit lines to start pursuing larger accounts. We had exactly 2 meetings with him. We determined that he was selling to credit-worthy clients, and we told him at the end of the second meeting, we're going to say his name was Don, and Tundi from the Wilmington office was right there listening. We said, Tundi, we want you to go out and pursue $100,000 transactions now because we will fund them for you. When your vendor says to you, you haven't done this with us before, you've only done transactions for $20,000, $25,000, we will give your vendor an LC, an irrevocable letter of credit that says, Mr. Vendor, you supply these goods for our client so that he resells them to his client, and as long as you manufacture them to the specifications of his buyer, we release the letter of credit. You can now buy from your vendors in much larger volumes than you ever did before. This allows you the opportunity for greater profit, to grow your business, and that's what you got in business for in the first place. And it's very easily accessible. And it does not work off of your credit. It works off of the credit worthiness of your end buyer. What we want to know is, will they pay that invoice? It's pretty simple. And we're doing it right now with this client in Wilmington.
Thank you very much. I would open it, I guess we got a few minutes, Ken, for any questions from the floor. There's a microphone floating around. Okay. In my experience, and it's limited, 6 years in the small business because I came out of corporate, it's about networking. It's about seeking out different opportunities, and they change. It's a very dynamic market. Again, communicating with your banker, having the financials, having the capability, having the capability to present to them a business plan that's a strong, solid business plan, how you're going to operate, how you're going to repay the loans. You know, they want the money repaid. They're they're loaning out other people's money. You're my money as depositors in that bank. They want it back. So I get a lot of clients that, you know, start to understand that they need to put together, they need to have a great business plan, great marketing, but they need to have that back office set up so that they can present it to their bankers and communicate with them what's happening, and then follow it through and meet those milestones. And if not, then communicate what's going on. Bankers, nobody likes to be surprised with someone walking in and say, you know what, I told you I can't make the payroll now. No banker wants to be put in that position, and it makes it more difficult. So are there any questions from the floor? Over there.
I think it was Bill talking about the 401k plans. No, okay, Dallas.
Yeah.
My question regarding that is, if you have a 401k plan and you are a principal in a small business, but you have a 401k retirement plan from somewhere else, will, and this is to anyone, the bankers accept that collateral instead of having to put up the money as equity? Are there cases where that could happen?
There are.
Go ahead, Dallas.
Yeah. There are firms that do an asset-backed loan against that. It's a complicated procedure, but you can take your low-cost basis stock portfolio, transfer it over into your 401k through our procedure, then that can be transferred and used as an asset-backed loan. So that is possible, if that answers your question. Did I answer that?
I don't think,
It answers it only if that means I don't have to take it out and give you 20% or put 20% into my business. So I got the 20%, but I want it to stay in my retirement account.
so what you're asking there in that case is really 100% financing
yes,
from
but
the bank
knowing it
using
could
the 401k as the collateral.
Right.
And Joe, Bill, I don't think you can do that.
No, you can't.
No.
I'm sorry.
No, no, go ahead.
I was going to say, you cannot collateralize your 401k.
Okay, what about some other money I might have that's not 401k? But I want 100% financing where you could look and say, okay, the money is here, but I don't have to turn it over the 20%. You know it's there, so if things start to happen, it's like a co-signing type of thing almost, I guess.
Usually the bank does like to see an injection into a business, and it's approximately 20%. For example, the SBA does have 504s if you're buying a piece of property that could be 50, 40, 10, which only 10% in. But normally the bank does like to see monies going into the deal, that's hard money coming out of the client's pocket into the deal, towards the deal, yes. They do.
I've heard that there are cases,
Yeah.
maybe that's for some other people, where they do the 100% financing.
There
And
might have been
use that
5 years
collateral.
ago. You're not going to find too many in this
okay.
market today.
Yeah.
Okay.
Any other questions?
Can I,
Go ahead, Van.
can you hear me? Can you hear me? Okay.
Oh, there you go.
We require an equity injection as well, but we have used money folks have had in CDs and other accounts as collateral. So, you could borrow against it, leave it in the bank, use it as collateral to secure a loan, but you still would be required to put some cash into the deal, 10 to 20% for us.
Any other questions? Well, I thank you all for hanging around on a beautiful Friday afternoon. I thank the panelists for their participation.